What is going on, everybody? My name's Christian Robert, and on this channel we talk stocks, personal finance, and wealth building. And to start the video off, I just want to say thank you to all the new subscribers that I have received. I'm recording this on July 3rd. I will probably upload this over the weekend, so I hope everybody had a fantastic 4th of July. And I'm recording this 2-3 days after my dividend portfolio video, and as you can see, it has been by far my best video. It's surpassed my most watched video in 3. I uploaded on Sunday, so this is day 4 actually. So it's incredible. I've wanted to show my YouTube channel tab, and in the last 28 days it's showing that I've increased subscribers by 87. Since I uploaded that video on Sunday, I must have seen at least 20-30 new subscribers. So thank you to everybody who subscribed recently. I hope you enjoy the content, and we are just going to do a quick M1 Finance update today. I've made a little bit of a change to my portfolio, but before we do, it's not something that I push very often, but M1 Finance has a cool promotion right now where if you sign up using my referral code, you can get $20 to start investing. I will also get $20. I will comment it in the top comment below. I will pin the comment so you see it at the very top. So if it's something you're interested, if you had your eye on M1 Finance and you want to invest, you can use it. I'll get $20, you'll get $20. But yeah, that's it. So if we look at some of the progress this portfolio has made all time since January 17th, you can see we're up 9.98% or $29. We've brought a total earned dividend of $4.70. In the last 1 month, we're up 9.4%, and we've brought in $2.22. So, we're starting to get moving as far as dividends coming in goes. And the change that I made is that I removed Citigroup, and that is because I'm adding a banks pie. Now, I love bank stocks. I think, banks are a wonderful sector to be a part of. And the mindset that I kind of got myself in at a young age is that, take JP Morgan, for example. I could easily go open a savings account with this company, and I could throw $100 in my savings account, and I could get, 0.002% or whatever ridiculous amount it is, and receive a couple cents a year. Or I can put $100 into the stock, and I can receive a 2 to 3% dividend. So that's just the mindset I've always had as far as really a lot of stocks go. I'd rather be part owner of that company rather than be on that other end and just receive pennies on the dollar. So, that's just one of the mindsets a lot of investors have, or maybe that's just me, I don't know. But I picked a handful of stocks and a few credit card companies that I really like. JP Morgan will take the lead on 15%, and then most of them will just get 10%. Ally Financials, American Express, Bank of Hawaii, Citigroup is back in here, Royal Bank of Canada, Toronto Dominion, Visa, Wells Fargo, and Bank of Montreal. So I have 3 Canadian stocks. I love Canadian stocks as well, or the bank Canadian stocks. They usually offer a higher dividend, and they seem to be a bit more stable. So I think this is a good blend of bank stocks. Comment down below what you guys think. I'm sure Wells Fargo will have a bit of back and forth opinions, which is perfectly fine. You're not going to like every stock that I pick. So if we go back to the main portfolio, the banks, right now I just threw it at 5%. I'm going to play around with this portfolio a little bit. I will probably do a somewhat like a food and consumer product pie where I throw in my McDonald's. I want to add Costco really bad. Maybe add Yum Brands, stuff like General Mills. I might not add that one because I already own it in my main dividend portfolio, but you get the gist of it. and maybe a tech pie. We will see. But the next thing I wanted to talk about is the aggressive dividends. This is where a lot of my attention has been lately. Right now it represents 41% of the portfolio. It has a 30% target allocation, but I've been, instead of auto investing the money, I've gone into the aggressive dividends pie, and I've clicked the buy this pie rather than it going to the correct allocations that it needs. So I'm trying to build this up rather quickly for dividends. If we look at the last 1 month, you can see I'm up 2.56%, and I brought in $2.11, which is awesome since I only have $285. I actually just added $50 today. So, if you think about it, I've brought in $2.11 off of $235. So that's awesome. I don't know where to show you the pie information. I know this pie has roughly an 8% yield right now, and that's why I want to kind of go through this with you guys. Now, you're going to see some stocks that you like and don't like. That is perfectly fine. I am chasing current yield right now. I understand that some of these investments are high risk, but as I put more money into it, I will slowly back off of the riskier investments and substitute it with more stable companies. But since I'm just starting this portfolio out, I want to have some fun with it. I'm not afraid of a little of moderate risk. So that's why you'll see stocks like AG&C in here. Another very risky one is Cornerstone Strategic. If we click on this one, you can see that it offers a 22.36% dividend. So obviously it is very risky. This doesn't give a good representation of how the stock has been acting. This is just how my money has changed as it's been invested in here. But this is only 2% of the pie. So keep that in mind as well. It's not like this is 20-30% of the pie. AG&C is 15%, but that'll slowly start coming down now that I got a nice little amount in it. That's roughly 2 shares, I believe. Yeah, 2.1 share. So I won't be giving that one too much more attention now that I've got a little bit of cash into it. But I have Main Street Capital. This will represent 10%. I might end up bumping this up more because I really like this one. This is a stock that I really want to add in my main dividend portfolio with TD Ameritrade, but I'm really trying not to be adding too many more stocks because I want to grow the current positions that I have. So this will probably become a big position in my M1. We have the AG&C, a couple of ETFs, Global X Super Dividend, and Global X Super Dividend. This one is with International. This one is not. Then we have New Residential Investments, a couple of Gladstones. We have Good, Gladstone Commercial, UTG, Reeves Utility Income, Stag, Glad, which is the other Gladstone Capital Corporation, Whitestone REIT, the CLM, Land, which is another one I really like. This would be a bigger percentage of the pie, but it does not have that high of a yield. It's around 3 or 4%. Next, we have LTC Properties, EPR, Shaw Communications, CenturyLink. This is not a monthly dividend payer, but it's in the portfolio because it is a high dividend payer. Orchard Island Capital, which is another high risk one, and Pembina Pipeline. So comment down below what you guys think of this pie. I'm sure we'll get a lot of mixed opinions, which I love to see both sides of it. I love the good criticism and the bad criticism. So that's what this pie is. It's just chasing some current yield right now. So keep that in mind. Once the portfolio gets much bigger, I will not be as risk heavy, if you will. And yeah, other than that, I still have my Amazon. I'm trying to get it down to its true 5% target allocation. So whether it's by pumping money into aggressive dividends or all the other ones, this will slowly start coming down. Tesla, I have it at 25%, but I'm not too focused on Tesla right now anymore. I have my 10 shares in Robinhood. I'm pretty content with that. UTX, I want to be getting more money into. Facebook, I'm pretty happy with where I'm at with this. I don't really plan on putting more money into it. And then McDonald's, Duke Energy, Verizon, lazy retirement. I've mentioned this in a previous video. This is how I would invest if I was focused on retirement. And so I thought it would be fun to kind of put this as its separate pie so I can track the progress of this pie compared to the rest of it. So, I want to see how this performs in a correction or a recession. And, that might give me a better idea of how I want to invest in the future. Maybe I turn a lot more ETF focused down the road. Right now, I don't see that. I really enjoy picking individual stocks, but, this is kind of a fun little experiment for me. So that is my portfolio. Comment down below what you guys think, like I said. And if you haven't already, make sure you subscribe to the channel, like the video, and I will see you guys in the next one.